Hello guys, a very good evening. So today let's continue with the final accounts. In the last class we have completed till problem number 6. So now let's start with problem number 7. Okay, so problem number 7, page number 114 in your textbooks. Following is the trial balance of Ram Lal on March 31st 2007. So they have given the debit balances. Okay, let's start marking which item falls under the trading or profit and loss account or a balance sheet. So bank is a asset, so balance sheet asset side. Purchases adjusted, so they have given adjusted purchases, means adjusted purchases is equals to purchases less purchase returns. It is the meaning of adjusted purchases. Okay, so they have already deducted the purchase returns from purchases. So adjusted purchases 34 lakhs 96,000, that comes under the trading account debit side. Salaries expenditure, so P&L account. Carriage on sales, so what do you mean by sales? Stock is going out, so carriage on sales is nothing but carriage outwards. So generally carriage outwards is nothing but it's like an expenditure on the sales. It will come under the P&L account. Expenditure on the sales like advertisement, or to make the sales we are incurring some carriage outwards expenditure, carriage expenses. So it is nothing like, it is same like advertisement expenses. So carriage outwards will always come under the P&L account debit side. Carriage on purchases means nothing but we are purchasing some stock, so stock is coming in inwards, it is inwards, so carriage inwards. Carriage on sales is carriage outwards. Carriage on purchases means carriage inwards, so carriage inwards comes under the trading account debit side. Okay, lighting expenses, that is P&L account, it is a nominal expense. Buildings, it is an asset. Rates and taxes, P&L account. Sundry debtors, it is an asset, so balance sheet asset side. Furniture, it is an asset. Cash in hand, it is also asset. Bills receivable, asset. Stock 31st March 2007, so it is a closing stock. Since we have provided with the trial balance as on 31st March 2007, so stock on 31st March 2007 is 3,06,250. It is a closing stock. Okay, they have not given the opening stock in this question. No worries, we should not take any opening stock. Credit balances, they have given capital, bills payable, loan. So these items comes under the liabilities, comes under the balance sheet liabilities side. And sales comes under trading account. And say discount 2,000, that comes under the P&L account. Commission 500, sundry creditors commission 500, P&L account. See, since they have given these are credit balances, discount and commission is nothing but discount received and commission received, means received items, that we have received some income or gain in the form of discount or commission. So these are the credit balances, it will come under the P&L account credit side. Okay, sundry creditors, it is a liability, so balance sheet liability side. So next comes to the adjustments. They have given rates have been prepaid to the extent of rupees 600. So in the last class I have told you the principle, that how to use these prepaid, outstanding, accrued and advances terms, and how these terms will be we will play with these terms in the problem on solving the solution. Okay, whether these should be added or whether these should be deducted. In the last class, in the last problem I have told you the principle. So the prepaid rent, that is the rent we are paying in advance, the future expense we are incurring now without maintaining a cash. If we would have maintained a cash, it is an asset balance. So of course the prepaid rent is an asset balance. Okay, the prepaid rent rates is an asset balance. So it adjustments will have two effects, one effect in the trading account or profit or loss account, and one effect in the balance sheet. So we need to see whether the two effects are being made while solving the solution. Always remember this while solving. Okay, adjustments will have two effects. During the year, bad debts amounted to rupees 2,500. Okay, for the debtors there is an adjustment. So there is a bad debts. Bad debts comes under the profit and loss account debit side, that is expenditure, and it will be deducted from the debtors balance from the in the balance sheet. Okay, next comes to provision at the rate of 5% has to be made on the debtors. So again one more adjustment on the debtors. First they have given bad debts, so after deduction of the bad debts, 40,000 minus 2,500, the balance comes to 37,500. So on 37,500 you need to take 5% provision for bad debts. Okay, 5% provision for bad debts has to be made on the debtors. Buildings have to be depreciated. Okay, depreciation, so P&L account one effect, debit side, and in the balance sheet we need to deduct this depreciation amount from the balance of buildings. Furniture at the rate of 10% depreciation. Okay, P&L account and balance sheet furnitures. Prepare trading and profit and loss account and balance sheet as on 31st March 2007. Okay, let's start with the preparing solution, that is trading and profit and loss account of Mr. Lal for the year ending 31st March 2007. Okay, so since start with the trading account, and since they have not given the opening stock balance, so let's start with the purchases. The first item after the bank is purchases adjusted, that is 34,96,000, and next salaries, that comes under the P&L account debit side. Okay, carriage on sales, that is carriage outwards, therefore it will come in the P&L account, so take it in the P&L account. Next is carriage on purchases, it will come under the trading account debit side. Okay, take it in the trading account debit side. And next lighting, so this lighting will come in the P&L account debit side. And next buildings, okay, take this buildings amount to the balance sheet. And next rates and taxes, and take this rates and taxes to the P&L account rates and taxes. And for rates and taxes we have one adjustment, right? While reading the question you need to mark near that point, rates and taxes have adjustment. Okay, ADJ is a shortcut, you need to mark like that, so that while preparing solution only you need to carry these amounts to the respective accounts, whether the trading account, profit or loss account, or balance sheet. Okay, this will make your solution easy and simpler. Rates and taxes, for this rates and taxes you have some adjustment, that is a prepaid rates and taxes 600. So what you need to do, the prepaid advance paid, that is you need to deduct from the rates and taxes in the P&L account. So 2000 minus 600 comes to 1400 in the outer column. So this rates and taxes will be again get the effect in the balance sheet on the asset side. So take this prepaid rates and taxes on the asset side under the balance sheet. Okay, the next comes to sundry debtors. Okay, sundry debtors, for sundry debtors this amount will be carried forward to the balance sheet. So now for sundry debtors there is some adjustments, that is bad debts 2500. So take this bad debts 2500 in the P&L account debit side. And next adjustment where you need to make in the balance sheet, that this sundry debtors, from the sundry debtors you need to deduct this bad debts amount, because these bad debts we will not receive, it is a loss. So debiting the loss in the P&L account, and again deducting from the debtors balance bad debts of 2500. So the net balance 40,000 minus 2500, that is 37,500 in the inner column of that sundry debtors. Because for sundry debtors there is one more adjustment, that is provision at the rate of 5% to be made on the debtors. So on 37,500 into 5% we will get 1875. This 1875 is also a loss, that is we are making, it's also an expenditure that we are making provision for future. So this will come under the debit side, debit all expenses and losses. So this provision will come under the debit side of P&L account to provision for bad debts 1875. And this provision for bad debts will have the another effect in the balance sheet, that this amount needs to be get deducted from the debtors balance. So what is the debtors balance available for us now? 37,500. That is 40,000 minus bad debts 2,500 comes to 37,500, minus provision for bad debts, that is 1875. The total comes to 35,625. So the debtors are adjusted totally. Next comes to furniture 30,000. Take this amount to the balance sheet asset side. And next for furniture we are having adjustment, right? Depreciation at the rate of 10%. So 30,000 into 10%, the depreciation is 3,000. So this depreciation will come on the debit side of the P&L account. And one more effect in the balance sheet, that is furniture amount 30,000 minus 3,000. 30,000 minus 3,000 comes to 27,000. So the net balance in the balance sheet comes to 27,000. Okay. Next comes to cash in hand. Cash in hand will come in the asset side of the balance sheet, so take it to the asset side of the balance sheet. And next, bills receivable 7,500, it is also an asset, receivable, right? So it is an asset to the business, so take it to the asset side of the balance sheet. Stock, closing stock, they have given closing stock, so the closing stock will come on the credit side of the trading account generally. So here they have given in the question itself, see, if they have given the closing stock in the adjustments, not in the trial balance but in the adjustments, then only you will have to take two effects. Then only you will have to take the two effects. But in this question, what they have done is they have given the closing stock in the trial balance itself. Means the closing stock is already adjusted in the trial balance debit side. It is not given in the adjustment. If it would have been given in the adjustment, then we would have taken it in the then we would have considered two effects, that is on the credit side of the trading account and in the asset side of the balance sheet. Okay, but here they are giving in the trial balance only, not in the adjustments. Means it will have only one effect, that is it will not come in the trading account. The stock is an asset, so it will come only on the asset side. So the summary of this is, if they have given the stock, closing stock in the trial balance itself, then it will come only on the asset side of the balance sheet. Okay, if they have given on the in the adjustments closing stock, then it will have two effects, one in the credit side of the trading account and next in the balance sheet asset side. Okay, so in this question they have given in the trial balance itself, they have not given in the adjustments, so the closing stock will only come in the balance sheet asset side, it will not come under the trading account. Okay, so trading account, in trading account you should not take the closing stock in this question. Only directly it is an asset, so it will be carried forward to the balance sheet directly with an amount of rupees 3,06,250. Okay, next credit balances. Capital take forward to the liability side, and next bills payable, take it to the liability side. Loan 1 lakh, take it to the liability side. Sales is a credit item, so it comes under the trading account, so trading account buy sales on the credit side 36 lakhs. Discount and commission is are discount received and commission received, because they are credit balances. So credit balances are nothing but credit all incomes and gains. So credit balances of discount and commission received 2,500 will be forward to the, or will be taken on the credit side of the P&L account. Okay, next comes to the sundry creditors 1 lakh, so it is a liability, take it to the liability side of the balance sheet. Okay, so let's total. Now after taking all these amounts, let's total. See, one more adjustment we have missed here is, everything we have taken while solving the question. One more adjustment is on buildings, we have not taken depreciation while solving the question. Okay, then buildings have the depreciation of 2%, so buildings value is 1,35,000 into 2%, that comes to 2,700. So depreciation on buildings debit side of P&L account 2,700, and this 2,700 will be deducted in the balance sheet from the buildings balance. So 1,35,000 minus 2,700 comes to 1,32,300. Okay, so on solving and on totaling, you will get on buy sales 36 lakhs minus purchases 34,96,000 minus 2,000 carriage inwards or carriage on purchases, you will get the profit, gross profit of 1,02,000. This gross profit will be carried forward to the P&L account credit side, and so that by gross profit brought down 1,02,000. So on the credit side, what all you have now in the P&L account, 1,02,000 plus 1,02,000 plus 2,000 plus 500, so total comes to 1,04,000. So minus salaries 21,000 minus, take your calculators and calculate, minus 1500 minus 2500 minus rent and taxes 1400 minus bad debts and provision, bad debts that is 2500 minus provision for bad debts 1875 minus depreciation on furniture 3000 minus, at last what we have taken, depreciation on buildings 2700. So the net profit comes to 68,025. So this net profit will be added to the capital on the liability side of the balance sheet. Okay, so on totaling in the balance sheet, assets cash in hand 1250, bank 7500, bills receivable 7500, sundry debtors 35625, closing stock 3,06,250, prepaid rent and rates that is 600, furniture 30,000 minus 3,000 27,000, buildings 1,35,000 minus 2700 comes to 1,32,300. So here the total comes to 5,18,025. Okay, on the asset side. So let's calculate on the liability side, that is sundry creditors 1 lakh plus 50,000, bills payable, loan 1 lakh. So next capital 2 lakhs plus 68,025, net profit comes to 2,68,025. So the total comes to 5,18,025. Okay, like this you need to solve the final accounts problems. Okay, while taking the problems for each and every entry, if you are taking for example, if you are taking the buildings, so you need to take this buildings amount directly to the asset, and for the buildings there is some adjustment. So while reading the question we have marked the adjustment, so take the adjustment effect on the P&L side. Okay, you need to draw the table of trading account, P&L account and balance sheet on the estimation before only. After that you need to take these amounts directly to the respective accounts, and also you need to take the adjustments at that point of time only, so that you will not forget anything at last. Okay, and you need not worry about what you have taken and what not you have taken. Okay, if you solve like this, you will solve the problems very easily and very fastly in your examinations as well. So this is the solution for the problem number 7. Hope till here it is everything clear. So let's continue with the problem number 8. From following trial balance prepared from the books of Lakshmi Narayan on 30th June 2006, prepared trading and profit and loss account and a balance sheet. Okay, so they have given the debit and credit balances. So Lakshmi Narayan's capital and drawings, capital is on the credit side, capital will be a credit balance. So capital credit balance 1,19,400 and drawings is expenditure, so 10,550. So what is the what will be doing with the drawings amount? We will deduct this amount from the capital balance, that is 1,19,400 minus 10,550. Okay, in the balance sheet liability side, bills receivable 9,500, asset purchase and sales, purchase is the debit item on the trading in the trading account and sales is a credit item in the trading account. Return inwards is purchase returns. Return inwards is sales returns. Return outwards means purchase returns. Return inwards means whatever stock or whatever the sale we have made, we are receiving back the goods in. We are receiving in the goods. We are receiving in. So it is a return inwards. Like this you remember, return inwards is a sales return 2780. So it should be deducted from the sales amount. Stock on 1st July 2005, that is 89,680. This is an opening stock, debit side of trading account. Commission credit balance, so commission received it is. They have given the credit balance 5640. So commission received on the credit side of the P&L account. Plant and machinery 28,800. Asset balance sheet, salaries, traveling expenses, this will come under the P&L account. Debtors including Mohan for dishonored check rupees 1,000, 62,000 is the total debtors. That includes 1,000 of Mohan's check which is dishonored. Okay, we will see it later on. I think for this they have given adjustment. Okay, for stationery, telephone charges, it is an expenditure, P&L account debit side. Interest and discount, okay, interest and discount, they have given the debit balance, so it is an expenditure, so debit side of the P&L account, bad debts, debit side of P&L, fixtures and fittings, asset balance 8970. Next, creditors 59630, that is liability. 6% loan, it is also a liability because they have given the credit balance. Wages 4970, they have given the wages, so it is in the trading account. Cash in bank and cash in hand assets, so in the balance sheet. Insurance including premium of rupees 300 per annum paid up to 31st December 2006. We are preparing the trading P&L and profit balance sheet for the month on 30th June 2006, but this is paid up to 31st December 2006, means we have paid some advance amount. See, we are standing on 30th June and we are paying the amount for 30 till the 31st December 2006, means for 6 months we are paying an advance amount. So 300 per annum paid up to. So per annum is, what is the amount for per annum? That is 300. 300 is for per annum. Per annum means 12 months. So for 12 months we are paying 300. Out of that 12 months, 6 months is an advance amount. So 300 into 6 divided by 12, that comes to 150. So 150 amount is the advance amount we have paid up to 31st December 2006. We are standing on the 30th June 2006 and we are paying for extra 6 months, that is for the future we are paying today. So it is a prepaid expenditure. Okay, it is a prepaid expenditure. So what we have to do, prepaid expenditure, we need to deduct this expenditure from the insurance amount, 400 minus 150. Okay, 400 minus 150, we need to deduct this. And the next effect would be in the, again we will take this, it is an asset. Okay, unexpired insurance, that is the insurance we are paying for the future, it is a prepaid expenditure, so it is an asset. We will take it to the balance sheet. Okay, we will take it to the balance sheet. Next, rent and taxes, P&L account, debit side item. Stock in trade adjustments. Next, stock in trade 30th June 2006 was 1,28,960. So stock in trade they have given in the adjustments. Stock in trade they have given in the adjustments. So it will come on the credit side of the trading account and on the asset side of the balance sheet. Okay, write off half of the Mohan's check. Okay, in the debtors we have seen including Mohan for dishonored check of rupees 1000, right? 62,000. So debtors balance is 62,000. In that 1000 rupees is included. Okay, in that 1000 rupees is included. So what they are asking, write off half of Mohan's check. So what is the Mohan's check value? That is 1000. Half of Mohan's check means, that is 1000 divided by 2. We need to half the amount, so 500. So 500 amount they are asking us to write off, means nothing but bad debts. So here now 500 is the bad debt. 500 is the bad debt. So out of 62,000 minus 500, 61,500 is the debtors balance, and this 500 amount we will take it as a bad debts. Okay, we will see while solving the solution. So next, creating provision for 5% on debtors. Okay, it is also an adjustment for debtors. Manufacturing wages includes 1200 for erection of new machinery purchased last year. Okay, what is the wages amount they have given in the question is 40,970. So wages will come on the debit side of the trading account. So what they are saying is, it is an expenditure, that is erection of new machinery purchased last year. Okay, for the last year expenditure they are taking under the wages, so we should not consider that amount as a current year expenditure. Okay, so what we need to do, we need to eliminate this 1200 amount from the wages. We need to eliminate this 1200 amount from the wages, that is 40,970 minus 1200. Okay, 40,000 minus 1200. 40,970 minus 1200. However, this will not affect in the balance sheet because it will be carried forward. See, this minus 1200, if we do this minus 1200, so while calculating the gross profit, it will be considered while calculating the gross profit. That gross profit amount again we will carry forward to the we will carry forward to the P&L account credit side by gross profit brought down. We will get the net profit again. So what will we do with this net profit? We will take this net profit on the liability side of the balance sheet. So anyhow, this 1200 will be included in the net profit. This 1200 will be included in the net profit. So separately, we need not deduct this 1200, or we need not show this 1200 amount of last year in the current year expenditure, or in the current year income, or in the current year assets or liabilities. See, this 1200 effect we will directly deduct from the wages. Okay, so this is the last year expenditure. It should not be shown anywhere in the balance sheet or P&L account or trading and profit and loss account. Okay, it will not be shown. It should be like a hidden one. Okay, so directly we need to deduct this 1200 erection of new machinery amount purchased last year from the wages. We need to deduct this from the wages, and it will not show any effect anywhere again in the books of accounts. Okay, so anyhow it will automatically get adjusted in the profit. Okay, the net result will be the net profit. So the net profit, however, it will go to the liability side capital account. So however, it is being affected in the trading account, and it is being affected in the balance sheet liability side. Okay, so like this you need to solve this. And next comes to depreciation. Okay, depreciation of machinery, fixtures and fittings. Okay, and commission accrued. Commission accrued means we are having the commission received balance, commission received credit balance 5640 in the question. So they have given accrued. What I said in the last class, we need to add the accrued and deduct the advances on the income side. We need to add the accrued and deduct the advances on the income side. So we need to add this commission accrued to the commission received amount 5640, okay, in the P&L account. And next, this effect again, commission accrued will be shown in the balance sheet asset side. Okay, commission accrued will be shown in the balance sheet asset side. If at all we would have received the advance of commission, then we would have deducted this amount and we would have taken it in the liability side of the balance sheet. Here they have given accrued. Accrued is nothing but outstanding. Outstanding and accrued we will add, prepaid and advances we will deduct. Okay, so accrued, so it will take it on the asset side. Okay, next comes to interest on loan for the last 2 months is not paid, means it is an outstanding expenditure for the last 2 months. It is an expenditure of the current year, but we did not pay it still as on this date, so we will pay in the future. So it is a present liability which we are paying in the future, means it is outstanding still, so it is an outstanding liability. So what is the loan amount? 20,000. 6% is the interest rate. They have given 6% loan, so 6% is the interest rate. So 20,000 into 6% into, for 2 months we have not paid, so 2 divided by 12 comes to 200. So it is an outstanding interest. We need to add this outstanding interest to the interest and discount balance which is given in the question, that is 5870, and this outstanding interest will be taken to the liability side. This outstanding interest will be taken to the liability side. See, all the expenditure related advances and all the expenditure related outstanding amounts will be taken to the liability side. All the expenditures related are outstanding will be taken to the liability side, and income related outstanding, that is nothing but accrued incomes, that will taken to the asset side of the balance sheet. Okay, so if there is a prepaid related advance payment of expenses, then it will taken to the asset side. And if any advance incomes we have received, then it will taken to the liability side. Outstanding expenditures we will take it to the liability side. Okay, accrued incomes we will take it to the asset side, and this outstanding and accrued we will add in the balance sheet to the respective accounts. Okay, and prepaid expenses, we will deduct this from the P&L account and from the respective account, and we will take it to the asset side of the balance sheet. And advance incomes, we will deduct the advance income from the respective income in the P&L account, and we will take it forward to the liability side of the balance sheet. Okay, this is the summary of prepaid, outstanding, advance and accrued. Okay, and next, okay, these are the adjustments. So let's start with the solution. Preparation of trading and profit and loss account of Mr. Lakshmi Narayan for the year ending 30th June 2006. So first comes to the item capital and drawing. So capital 1,19,400, take it to the balance sheet. Next, deduct drawings 10,550 from the capital. Okay, this entry finished. Bills receivable is 9,500, take it to the asset side of the balance sheet. Next, purchases 2,56,590, take it to the debit side of the trading account. 3,56,430 sales, take it to the credit side of the trading account. Return inwards is the sales return, so 2780 deducted from the sales. So 3,56,430 minus 2780, net sales, net adjusted sales comes to 3,53,650. Next, stock on 1st July 2005, that is opening stock. So 2 opening stock on the debit side of the trading account, 89,680. Commission 5640 credit balance, it is commission received, that will be taken on the credit side of the P&L account. So credit side of the P&L account, and for commission we are having one adjustment, right? What is the adjustment? That is commission accrued 600. So this commission accrued, we will add this commission accrued to the commission received in the balance sheet, that is 5640 plus 600 comes to 6240, and this commission accrued will be taken to the asset side of the balance sheet. Okay, asset side of the balance sheet, that is 600. So commission entry finished along with the adjustment. Like this you need to solve in the exam also. Plant and machinery 28,800, so take it to the asset side of the balance sheet, and we are having adjustments for the plant and machinery, that is depreciation 5%. Okay, so 28,800 into 5% comes to 1440. So to depreciation in the P&L account, 1440. 1 second. Plant and machinery, what is the amount? 28,800. Okay, plant and machinery 28,800 into 5%, right? 5%, that comes to 1440. But in your solution they have taken 1500. I don't know why. Let's see. Okay, let's see. And next comes to salaries and traveling expenses, take it to the debit side of the P&L account. And next, debtors. Okay, for debtors there are some adjustments. So for debtors, take 62,000 on the asset side of the balance sheet, and there is some adjustment, that is to write off half of the Mohan's check, means 500, that is 1,000 lo half, that is 500. So 62,000 minus 500 comes to 61,500. So debtors balance in the assets side of the balance sheet, that is 61,500 in the inner column, because we are having some other adjustments also. Next comes to stationery P&L account debit side, telephone charges P&L account debit side, interest and discount 5870. For interest and discount we are having one adjustment, that is interest on loan for the 2 months not paid. That amount what we have calculated, 20,000 into 6% into 2 divided by 12, that is 200. So this amount we have not paid, but it is an expenditure of the current year which is not paid still, so it is an outstanding liability. Outstanding expenditure of interest will be added to the interest and discount in the P&L account, and it will taken forward again to the balance sheet. It is an adjustment, so it will taken to the balance sheet. On the liability side, outstanding outstanding interest, that is 200. Okay, next comes to interest and bad debts 3620. So take this bad debts to the P&L account. 3620 bad debts P&L account, And next, furniture, fixtures and fittings 8970 on the asset side of the balance sheet. And for fixtures and fittings we have adjustment of depreciation, that is 8970 into 10%, that is 897. Okay, that is 897 is the depreciation amount. So to depreciation in the P&L account 897, and deduct this 897 from the asset balance in the balance sheet. 8970 minus 897, which comes to 8073. Okay, which comes to 8073. And next, creditors, that is a credit balance on the liability side 59,630, 6% loan 20,000 on the liability side, and wages 40,970. This will come under the debit side of the trading account. And for wages we are having one adjustment, that is previous year expenditure of 1200 we have included in this year. So we need to eliminate this amount because it is the previous year expenditure. So 1200, 40,970 minus 1200 comes to 39,770. Okay, on the debit side of the trading account. Next, cash in hand, cash at bank, debit side of the balance sheet. Next, insurance, that is 300 premium up to 31st December. As I said you, it is a prepaid insurance. Future expenditure we have paid today, so prepaid insurance we have to deduct in the P&L. So take this insurance total amount 400 in the P&L account debit side, and from that 400 you need to deduct 150. How 150 came? 300 into 6 divided by 12. Okay, 300 is per annum, so we have paid up to 31st December 2006, that is from 30th June up to 31st December, it is 6 months. Okay, so if we take 300 into 6 divided by 12, so the amount comes to 150. So it is the prepaid insurance, so 300 minus 150 is equals to 300 minus 150 is the advance. So 400 minus 150 total comes to 250 in the P&L account. And this prepaid insurance will be taken forward to the balance sheet 150. Okay, prepaid insurance 150 in the balance sheet. See here in the brackets they have given, it is nothing but adjustment. So two effects. Rent and taxes 5620 in the P&L account debit side. Okay, so the next comes to, okay, we have not taken the provision for debtors, provision of 5% on debtors. So what is the debtors balance? After writing off the check balance 62,000 minus 500, we have the balance of 61,500. So 61,500 into 5%, 61,500 into 5% comes to 3075 is the provision. So take this provision amount in the P&L account of the P&L account debit side, that is 3075, and deduct this 3075 provision from the debtors balance in the balance sheet. So 61,500 minus 3075, you will get 58,425. Next, stock in trade as on 30th June was 1,28,960. So adjustment, two effects, credit side of trading account and take it on the asset side of the balance sheet. Next, so we have taken everything. Okay, we have taken everything. So this Mohan's check, what we have done, write off half of the Mohan's check, we have deducted the balance from the 62,000, that is debtors balance. And one more effect where we have to give, that is in the P&L account in the form of bad debts. So 500 is also the bad debts amount. See, out of 1,000 rupees, they have asked us to write off half of the amount of Mohan's check. So half of the amount of Mohan's checks is 500. They are asking to treat us as a bad debts. So 500 bad debts will come on the debit side of the P&L, and the same 500 will be get deducted from the debtors balance. So 62,000 minus 500 and minus provision what we have calculated 61,500 into 5%, that is 3075. So 3075 will come on the debit side of the P&L, and again we will deduct this 3075 in the balance sheet from the debtors balance. So the total comes to 58,425. Okay, like this we have finished every adjustment. So on totaling we will get on the credit side of trading account 3,53,650 net adjusted sales plus closing stock 1,28,960 comes to 4,82,610. So out of this 4,82,610 we need to deduct the opening stock, purchases and wages. Then we will get the gross profit. So gross profit carried forward to the P&L account. So on the credit side 96,570 is the gross profit. 96,570 plus commission receipt 6,240, total comes to 1,02,810. Okay, out of this 1,02,810 we need to deduct all the expenditure items on the debit side of the balance sheet. So the net profit we will get 65,028 rupees. So this net profit will be carried forward to the balance sheet capital account liability side. So what would be the capital amount now? 1,19,400 minus drawings 10,550 plus net profit 65,028. The total comes to 1,73,878. So on totaling of the assets and liabilities, the amount will comes to 2,53,708. So here this is the solution for the problem number 8. I hope till here everything is clear. Okay, so let's continue with the problem number 9. From the following trial balance of Mr. Ram, draft, trading and profit and loss account for the year ending 31st December 2006 and a balance sheet as at date taking into consideration following adjustments. Closing stock, okay, closing, they have given the adjustments, closing stock. So credit side of trading account and asset side of the balance sheet. 1 quarter of insurance premium falls in the next year. Okay, so it is a prepaid expense. 1 quarter means 3 months. Generally quarter means 3 months. So 1 quarter of insurance premium falls in the next year, means the next year expenditure we are paying today itself. The future expenditure we are paying today itself. So it is an advance expenses we are paying. It is nothing but prepaid expenditure. So what we will do, the prepaid expenditure we will deduct it from the insurance amount in the P&L account debit side, and we will take this to the asset side of the balance sheet. Okay, so let's calculate what is the amount of insurance premium given. 600 in the question. 600 into what is the amount of advance, that is 1 quarter means 3 months. So out of 12 months 600 is for 12 months, right? 600 is for 12 months. So out of this 600, 3 divided by 12, that is 150. 150 relates to the future. So 600 minus 150, we need to 450 will be the balance we'll get in the P&L account. Okay, this is the adjustment. And provide depreciation. Okay, and the loan to X carries 8% interest. 8% interest. Okay, we have given the loan to X. We have given the loan means nothing but it is an investment, so it comes under the asset side of the balance sheet. If we take loan, the business takes loans, means it is a liability. If we give the loan to some other party, then it will be the asset to the business. So loan to X is an asset and loan from Y is the liability. Okay, goods worth rupees 500 have been taken by the proprietor for private use. So it is a drawings. So these goods will be get deducted from the purchases, and it is given in the adjustment, right? If it is given in the adjustment, it will have two effects. Okay, one thing is we need to deduct this drawings of goods from the purchases, and next thing is we need to deduct this drawings of 500 from the capital in the balance sheet on the liability side. Okay, next is provide 5% for bad and doubtful debts. It is a provision. So on the debit side of the P&L account, and next this 5% will be get deducted from the debtors balance in the balance sheet. Salaries include salary to the proprietor of rupees 200 per month. So 1 year includes 12 months. So 200 into 12 comes to 2400. So amount of 2400 of salary we have given to the proprietor. So it is nothing but drawings. So on the P&L, in the P&L account debit side we will get the salaries. So out of that salaries amount we need to deduct this drawings amount of 2400, and as it is given in the adjustment we need to take this 2400 to the liability side of the balance sheet. We need to deduct this 2400 from the capital as drawings. Okay, so they have given the debit balances, stock, opening stock, salaries, opening stock trading account, salaries P&L account, drawings, we need to deduct this from capital, carriage inwards trading account, carriage outwards P&L account, return inwards is sales returns, so it is a trading account. Loan to X as I said to, as it is a liability, loan to X we have given the loan to X, that is nothing but asset. We have given loan to the third party, so it is an asset. If we take loan from the outsider, if we take loan, then it is a liability for us. It is an expenditure that we need to pay the interest on such loan. If we give loan to others, means it is an investment, so it will come on the debit side. So the loan to X comes under the asset side of the balance sheet. Rent, it is an expenditure. Goodwill is an asset. Okay, goodwill is an asset always, so it will come on the asset side of the balance sheet. Wages, it is an expenditure, trading account. Credit balances, capital, liabilities, return outwards, it is a purchase return, so it will get deducted from the purchases. Loan from Y, so it is a liability and they are given under the credit balance also, so it is a hint that it is a liability. Loan from Y, that is a liability, it will come under the liability side of the balance sheet. Rent outstanding, it is an outstanding expenditure, so it will come under the liability side. See, this rent outstanding will not come under the profit and loss account, because this is not an adjustment. It is given in the trial balance itself. So if only they have given in the adjustments, then you need to take the two effects. If they are giving this rent outstanding only in the question, then it is outstanding is a liability, it will come under only the liability side. It will not have any effect in the P&L account. Creditors, next, creditors 13,000 liability. Insurance premium, so insurance premium is having one adjustment, we have calculated, right, 150. So insurance premium, it is a credit balance, so insurance premium, it is a debit balance expenditure, so on the debit side of the P&L account. Bank asset, purchases trading account, debtors asset, advertisement, bad debts, discount, these are all the debit expenses, P&L account. Cash and furniture assets to the balance sheet. Liabilities for other expenses is nothing but liability, so on the liability side of the balance sheet, it is not an adjustment, okay, only on the liability side it will appear again. Provision for bad debts will appear in the P&L account. And it will not have any effect. Provision for bad debts 1000 rupees will not have any effect in the balance sheet. Okay, will not have any effect in the balance sheet. Only we have to take in the P&L account only, because it is not an adjustment. Only adjustment thing we need to take to the balance sheet. Discount is given as a credit balance, so it is a discount received on the credit side of the P&L account. Sales, credit side of the trading account. Rent by subletting, okay, rent received, it is because it is given on the credit side, so it is a rent received, that is 500. Okay, rent received, that is 500. So let's start with the preparation of solution. Trading and profit and loss account of Mr. Ram for the year ending 31st December 2006. So to opening stock 6,000, salary is carried to the P&L account, drawings take it to the balance sheet, that deduct it from the capital. Carriage inwards, it is a trading account, debit side. Carriage outwards, P&L account, debit side. Return inwards, sales returns, deduct it from the sales, so take it on the credit side of the sales. Less returns, that is 800. Loan to X, it is a investment item, so it is taken to the asset side of the balance sheet. Rent, P&L account debit side. Goodwill, take it to the asset side of the balance sheet. Wages, take it to the debit side of the trading account. Next, insurance premium. Insurance premium, take it to the debit side of the P&L account. And for insurance premium we are having adjustment, that is a prepaid insurance of rupees 600 into 3 divided by 12, that is 150. So 600 minus 150 comes to 450, and this prepaid insurance you will take it on the debit side of the balance sheet. Debit side of the balance sheet 150. Next, bank, take it to the balance sheet. Purchases 60,000, take it to the trading account debit side. And for purchases we don't have any adjustment. And next, debtors 30,000, take it to the asset side of the balance sheet. So for the debtors we are having one adjustment, that is where it is, provide 5% of bad and doubtful debts. So on 30,000 calculate 5%, that is 1500. So 30,000 minus 1500 comes to 28,500 in the balance sheet, and it is an adjustment. So provision, this provision will also come under the P&L account debit side. P&L account debit side. Okay, they have given advertisement P&L account debit side, bad debts P&L debit side, discount, this is discount given in the debit side, so it will come on the debit side of the P&L account. It is discount allowed 600. Cash and furniture taken to the take to the asset side of the balance sheet. So for furniture there is a depreciation of 10%. So for furniture there is a depreciation of 10%, that is what is the furniture, 3000 into 10%, that comes to 300. So do depreciation on furniture 300 on the debit side of the P&L account, and deduct the same amount in the asset side of the balance sheet. Okay, 3000 minus 300 comes to 2700. Next, capital, take it to the liability side. Take it to the liability side, and return outwards is a purchase return. So for purchases we are having adjustment, I forgot, purchases we are having adjustment, that is return outward. So deduct this 500 from the purchases. 60,000 minus 500 comes to 59,500. Minus drawings of goods, we are having adjustment, right, for drawing of goods for personal use. So we need to deduct this 500 from the purchases, and this 500 shall also be get deducted from the capital drawings, from the capital asset drawings. Okay, next, for loan from Y, this is a liability, so on the balance sheet side. Rent outstanding, it is a liability, so on the in the balance sheet liability side. Creditors, liability for other expenses, liability. Provision for bad debts, P&L account debit side, that is 1000. Discount, it is a credit balance, so it is a discount received income, so credit side of the P&L account. Sales, trading account credit side 700. Rent by subletting, that is credit side of the P&L account. Okay, next comes to adjustment, closing stock, credit side of the trading account, and take it to the assets of the balance sheet. Insurance we have adjusted, 10% depreciation we have adjusted. Here comes to loan to X carries 8% per annum. So loan to X is a investment, that is asset. So 3000 into 8% comes to 240. Means if we have given loan to any third party, then we will receive interest. So interest received is nothing but profit, so it will come under the profit and loss credit side. And we have not received this interest, this received it is given in the adjustment, so it is an outstanding, it is an accrued interest. Because it is an income, we will use the accrued word. So it is an accrued interest, we have not yet received this income. So this 250 will come on the credit side of the P&L account, and it will be taken to the asset side of the balance sheet. It is interest accrued. Okay, interest accrued, which means the income which is yet to receive. Loan from Y carries 6%. Loan from Y is a liability. So liability means outstanding. We will use the word outstanding. Outstanding interest we need to pay still. So that is that comes to loan from Y 5,000 into 6%, 300 would be the outstanding interest. So it is the liability and it is an expenditure we need to pay, so it will come on the debit side of the P&L account and on the liability side of the balance sheet. Okay, on the liability side of the balance sheet. So the next adjustment, that is goods taken for private use, so we have deducted this from purchases and we have to deduct this from the capital as well. Provide 5% doubtful debts, okay, we have provided. And salaries include to, okay, from the salary 6,000 we need to deduct 2,400, that is 200 into 12, 2,400 is drawing. So from salaries 5,000 6,000 minus 2,400 comes to 3,600. Okay, and this 2,400 is drawing, so this drawings also to be deducted from the capital in the liabilities of balance sheet. Okay, so like this we have given the adjustments, and then next comes to totaling. Total the amounts, you will get the gross profit and then the net profit added to the capital, and then equalize the amounts on the asset side and the liability side. Okay, like this you need to solve the problem number 9. Okay, I hope till here everything is clear. So in the next class we will continue with the problem number 10. Okay, in the next class we will continue with the problem number 10, and thank you so much for watching the class, and see you in the next class. And if you have not yet subscribed to my channel, please subscribe to my channel and ring the bell icon. Please like my video and share the video with your friends who are in need of this class. Till then, stay happy.